ETF we're going to look at today. This is the FolioBeyond Rising Rates ETF. It seeks to go up when rates go up, which obviously this would be a good market for that. I'll get to the strategy in a second. It's 129 million. Pretty good size for an ETF that is A, new, and B, charges 1%. But this, I would almost put this more like a hedge fund. I think this is a hedge fund type strategy. Let's look at the holdings. It's not going to look normal. These are what are called IOs, or the interest-only portion of mortgage bonds. And the reason these would go up when rates go up is prepayment risk is pretty much off the table, making that income stream more valuable. So this has a duration of negative 10 years. Let's see if that interest rate sensitivity is played out in the returns. So we're going to look at RISR versus TBX, which is negative 1 times 7 to 10 year treasuries, and then 7 to 10 year treasuries. So you can see those are down. This is exactly the inverse. RISR, 31%. And that's why it's gotten some looks despite that fee. So look, anything that's up 31% is the minority of ETFs this year. And so I'd expect this to see more flows if it can keep up the performance.
Thank you, Eric. And joining us now to talk about this ETF is Young Ling, CEO of FolioBeyond. It has $160 million in assets under management. So if I look at a chart of this ETF, it launched only last year, but it looks like not much action until January of 2022. And then performance just absolutely takes off. So what was the sea change that happened right at the turn of the year that really is fueling this performance now?
Hi, thanks, Katie. It was a combination of rates backing off quite a bit beginning of the year, plus mortgage spreads widening. So that combination of rate moves and spreads widening really put an impact on prepayment rates, which, as Eric said, benefits MBS IOs. Prior to this year, rates were sort of treading water, so there wasn't much of benefit from any kind of directional moves.
Do you expect the volatility to continue, and do you think we can say rates have peaked here?
We think we have some ways to go. So, there have been a lot of talk about recession in recent days. I think a lot of that is overblown. There's a lot of other economic data to be released. And then the big unknown is the strength of the unemployment market. So unlike previous recessions where unemployment rates rose, this time around the labor market remains very strong. So that's certainly providing some conflicting signals.
Young, Eric here. If we look at the duration, negative 10 years, and I know this is actively managed ETF, so that way you can keep that negative 10 years locked in, or at least finesse it so it is around there. Let's say rates go down, the Fed backs off, they're afraid of recession, rates start going down. Will you or could you use the active management portion of this to change and maybe put it into cash or something because you know it's going to go down? Or are you locked into the IOs?
Well, we are designed to provide exposure to IOs. We certainly have flexibility in managing our duration risk by tweaking the duration a little bit. So I would say our range of duration would be, call it -5 to -15. But we would not necessarily go to zero. The way we would protect ourselves in a major bull market type of scenario is by buying call options on treasuries. So although our duration would not necessarily be zero, we would have the protection from the convexity effects of a call option.
Young, it's all very complicated stuff, which is your wheelhouse, right? I mean, you spent years creating structured products and making advanced analytical tools for this stuff. You also wrote a book on collateralized mortgage obligations, which leads me to ask, does anyone know how the market's going to react to quantitative tightening? Does anybody know what's going to happen as the Fed starts to reduce its balance sheet?
Well, there are a couple of things that are likely to happen. Number one, as the Fed unloads more MBS off of their balance sheet, that's going to cause pressure on spreads, MBS spreads. That actually benefits our strategy because widening MBS spreads slows down prepayments, which helps IO valuations.
Young, unfortunately, we have to go. That is Young Lim of FolioBeyond. Thank you so much for joining us. Great to get some time with you. Before we go, here's a special look at another